Hi everyone, this is Jason Burek of Wall Street from Main Street. Welcome back to another Wall Street from Main Street podcast interview. Today's special guest is a returning guest. I like to have him on every couple months. He's a friend of mine via Twitter. We met that way, and I think, his views, he should have a lot more subscribers on his YouTube channel, a lot more views than he currently does, but he's also censored by YouTube. He's a former Wall Street lawyer. He is also a former executive on Silicon Valley. He's a follower of the Offshoring School of Economics. He's now, he rebranded Smaulgld as the red pill for the red pilled. Louis Cammarosano, thank you for joining me again.
All right, Jason, thank you very much for having me on, and thank you for that kind introduction.
You're welcome. You deserve it, man. You do good work compared to all the pumpers out there for gold, silver, and the other stuff. And, a lot of the stuff that's repeated in the alt media verbatim that doesn't look at the data, that doesn't look at how the world is changing. I really love how you call them out on it.
Well, thank you, Jason. Let's see if we can do some calling out today.
Yeah, I mean, we're not going to get one of those 50 or 100,000 view videos like some of the other channels will. But if we get 10,000 views from this and we're analyzing the data better, then I'm happy with that.
All right, count our blessings for every visitor and every person who tunes in. Thanks for doing that.
Well, our last video on China, the credit bubble in China, did pretty well. So I know some of our listeners, Louis, enjoyed it so much. I think a few of them listened to it at least 2 or 3 times from what I've heard from feedback.
God bless them.
Okay, so you and me were discussing in Twitter direct messages about these tariffs that the President Trump and China are threatening back and forth. And so rather than, a bunch of direct messages back and forth, I figured, hey, let's have Louis back on. Let's have a discussion about this on a recording, and our audience, both of our audiences can benefit from this. So in your opinion, why do you think the U.S. is adamant about that it wants to start a trade war with China? And why, in your opinion, do you think the U.S. can win it?
Okay, so for starters, if you just look at when people say tariff, anything Trump says on the left, they're going to be against. Now, normally left-wing people are for tariffs because they like to protect the workers. That's the old Democrat. I don't think they think that way anymore. They're in bed with the bankers. But what's interesting is you're seeing the Republicans, the free traders, all saying that this is ridiculous, that Trump is introducing tariffs. And I get the argument. From a free trade perspective, tariffs aren't good. Adam Smith, Wealth of Nations, it should be the interest that people should be able to buy whatever they want from those who sell it the cheapest. I get all that. That's free trade. If, for example, if there's no tariffs and China sells X good to the United States at $10, you got a division of cheap labor because they can make it for cheaper. They can sell it for cheaper than we can. If we had to make it, it would cost us $20. You would say, what's the problem? That's free trade. Why do we want to care about that? Let's take the $10 X good. But the problem with it is that China gets richer, and you would think that as they got richer, they would use the money that they make, because obviously they should be making a profit at $10, that's why they send it to us, that they would then be able to buy U.S. goods. However, they don't buy the U.S. goods because they have capital controls. So automatically now not automatically, but you now see where you don't have free trade because they have capital controls, that money doesn't leave China. It stays there. So in a sense, we send them what they call the pieces of paper, and people try to make that sound like China's getting the wrong end of the deal. No, they're not, because no matter what you say about the dollar can instantly and through the massive liquidity be turned into something else. And that's something else that the Chinese use. They buy assets with it. They can buy military hardware. They can buy gold mines. So it's not like they're just getting pieces of paper through this arrangement. So they don't trade back with the United States. And then, because they have the capital controls, they don't buy U.S. goods. But even if they do buy U.S. goods, the tariffs that the goods that come from the United States into China are higher than the tariffs that we pay for goods coming in from China. So we have low tariffs on the goods coming from China, which you say that's good. And then, but when we send goods over to China, there's a high tariff. So, well, now let's get one step further. It gets even worse. They often in China take U.S. IP, don't pay the license fee, then make those products using the US IP and sell those goods back to the United States, sell them to themselves domestically, and sell them internationally. So again, that's not free trade because now the US IP isn't protected. It's a lot of money in research and development that goes into that IP, and then China basically sells the good back to the United States. So they use all this unfair, what I call unfair trade profits then to buy assets and build their economy. Now, people are acting like, well, hold on, there's one more thing. For strategic items now, forget free trade for widgets and X good and whatever else, sweaters or whatever they want to sell us for cheap. For strategic items, the free trade argument goes out the window because you can get into a situation with China if, let's say, China makes the cheapest steel. China makes the cheapest stuff that we use to make our military hardware. Well, you'd say, well, that's great. Why should we bother? Let them make it for cheap. We just buy it from them. But what if the United States is in a strategic situation where it has to go to war either with China or an ally of China? Well, then we're in a situation where we have to borrow money from China in order to buy their cheap steel, which they're not willing to sell to us. So now you're in a real situation. When you look through everything I just went over, that's not free trade. And people are acting like Trump is introducing tariffs into this wonderful free trade environment where we all know tariffs are bad and this is going to harm us. So I'm looking at these tariffs as a tool, as a way of perhaps getting to something closer to free trade. It's just like when I was on another show once, we were talking about voting. People are saying voting is bad. It's imposing your will on somebody else. But then I mentioned Lysander Spooner, the concept of defensive voting. Maybe it's not ideal, but if someone's going to vote to take something from you, maybe you can vote to stop it. And it's the same here. If you don't have free trade, maybe using tariffs will help somehow level the playing field and get free trade, because these global deals that they have where tariffs are set, that's not free trade, that's set trade. And I believe when Trump says, I want fair trade, not necessarily what they call free trade, and I think that's what he's getting at, is that because the way the trade deals are organized, the United States does not get a fair shake. They got a fair shake because the political leaders thought at the time the best thing to do was to outsource everything to China. Then they realized that that is not only a strategic error, but it also, because of the way China operates, doesn't lead to free trade. It's not like, well, we got China richer now through the wealth of nations because they produced, we consumed, and then they become rich, and then they spend more money. In a sense, they just got richer. So during the last 30, 40 years, if you look at it, China has gotten so much richer, but the United States hasn't. And I heard Trump complaining. He says, well, then they don't have to deal with global warming and these environmental issues because they're growing. So they're emerging. So they're allowed to do things. And the United States is at a point where it can't grow, but somehow China can grow. In a totally free trade environment, both countries would be growing. And I think the purpose of these tariffs is to try to level that playing field and bring growth back to the United States. So I'm against tariffs in a free trade environment, but we don't have a free trade environment. So that's why I think the tariffs are actually a good thing. They're a way of shaking things up and creating a new deal, which might lead to more free trade.
So you think the tariffs are just being used as a negotiating tactic, that he doesn't actually want to have to go that far, that he wants to just bring the Chinese back to, so the Chinese will panic and then agree to some type of deal that's more beneficial to the U.S. compared to what we have now?
Absolutely. You see, if you think about it, well, I do believe that there's two types of tariffs. Tariffs that are done just to protect an industry, those are bad. Because if you do it just to protect an industry, you're favoring producers over consumers, and you're favoring certain producers over other producers. So, for example, if they said sweaters, we're going to put a tariff on sweaters because we want to save the U.S. textile industry. If that has no strategic value, then all you're really doing is charging consumers more for sweaters if China can make them cheaper. I think he's trying to do three things. He's trying to make sure that the United States is not disadvantaged strategically because of the current trade agreements, where the United States can't compete on steel. So I think he's willing to subsidize steel. I also think he's using it to clamp down on their IP, get them to start enforcing the IP that they basically don't follow the intellectual property rules whereby they're paying the United States intellectual property or copyright holders. So I think he wants them to clamp down on that. So he's using the tariff to nail down those two things. And then I think he's also, in just a generic sense, with things like sweaters, if, for example, we have to pay the 30% tariff to send goods into China, and they only have to pay 2%, I think he wants to even those out. So those are three examples where if you threaten them with a tariff, they may make movement on each of those three items. Now, also, because, as I mentioned, China has got richer, notwithstanding the fact that people say they're just getting paper, nonsense, those dollars can buy them stuff. They have gotten richer from this trade agreement. So therefore, they have created their entire economy. They've planned their entire economy around the way the world is currently set up with trade. If Trump says, well, you're going to have to pay a higher tariff, now that screws up their entire central planning. Now they realize the cash flow that they were going to get from shipping goods into the United States, from taking intellectual property, is going to go away. When they're already having problems with state-owned enterprises not turning a business, well, how do you think the Chinese government funds their state-owned banks that make non-economic loans to state-owned enterprises? Well, they do it in part by the trade surplus that they get from the United States. So that's one way that they, without having to print more yuan, they can finance all of their mistakes in central planning with trade with the U.S. So I look at this as a far bigger deal than just, I'm for free trade, I'm against free trade, I'm for tariffs, I'm against tariffs. This is not just about free trade and tariffs. This is about global order. This is about strategy, and it's about trying to create a more level playing field. Now, you could say, well, it's not China's fault that the United States for the last 30 years encouraged them to act like this. Well, just because they've been encouraged for so long, well, they've grown up now. They can't get the same break that they got when they were an emerging country.
So I'm also 100% for free trade, and I'm against tariffs. However, in reality, the situation we have now, we've really never had free trade. So what you see as free trade in the textbooks with Adam Smith, with the Austrian School of Economics, in reality, what we've had throughout financial history for hundreds of years, basically in different forms, is different versions of mercantilism.
Correct.
And with mercantilism, for our listeners who are not familiar with that, so when you were on the gold standard, you couldn't manipulate your currency exchange rates really with that if you were on a gold standard, but what countries did instead was they had protective tariffs. So for the U.S. government initially, and this was before the income tax, so in order to fund the U.S. government when it was a lot smaller, the U.S. government was funded with small tariffs on things, right? So if that was funding a small government, okay, small tariffs on things, okay, fine. The problem now is the economy is a lot larger, the government's a lot bigger, and to start, putting tariffs all over the place, history in the more recent history is Smaulgld. So, I think you'll agree with me on this, Louis, there was a lot of mistakes made during the Smaulgld era. There were enormous amounts of wage and price controls. There was a crazy amount of high tariffs and wage freezes and all kinds of real nonsense. I'm actually reading a new book on this now by Amnesty Schlaze about the forgotten man in the Great Depression, going through this about, FDR and his army of basically socialist or Marxist bureaucrats that were pulling levers for wages and prices and setting, and Herbert Hoover before him with tariffs. So we don't have free trade, and with the mercantilism, the two main things, the policy measures that governments have done in order to gain a trade advantage are either they manipulate their currency exchange rate, some type of devaluation or currency peg, like a dollar peg or a euro peg. China has done that with their dollar peg. The other one is tariffs on imports. And so, now in the modern times, Louis, if you talk to a regular economist or a regular talking head on the business TV channels right now, they'll say that after World War II, there was a free trade era, and that's what allowed the U.S. to prosper. I would not call it a free trade era. I would say that there were some versions of more free markets, but not really free trade, because you had a situation where the goods, as you said earlier, that were coming to the U.S., they didn't have tariffs on them, but U.S. companies in a lot of cases, if you were trying to, sell cars, this is just a few examples, if you're trying to sell cars or motorcycles into Europe, if you're Ford or GM, there were huge tariffs on that. That's why you don't see a lot of American cars in Europe. There were huge tariffs in South Korea. They're on cars and motorcycles. Same thing for Japan. So those versions, people like the mainstream talking heads, the mainstream economists would still call that free trade. I would not call that free trade. That is free trade in name only.
Now, flip that around. We mentioned the car examples. The United States has any manner of foreign cars here. We have Toyotas, we have BMWs from Germany, we have Mercedes-Benz, we have Kias from South Korea. So we have those cars in our country, but when you go to Europe, you do not see many Fords, Chryslers, Chevys, Corvettes. You don't see those cars in great numbers on the roads in Europe. And now Europe is a very protectionist entity. It's a trading bloc, and it acts that way. So I find it ironic that people are complaining that somehow Trump is this non-free trader when he's dealing with blocs, Japan, China, NAFTA, Canada, and Mexico, EU, which are massively protectionist and have tariffs on their goods. And somehow the United States is expected to be the beacon of free trade when all the other countries are heavily subsidizing their industries, devaluing their currencies, stealing IP, and shipping products back to the United States. I think he's right when he says they have been ripping us off. And he's also right to say they're not doing it with malintent. They're doing it because that's the arrangement that has been struck. And these tariffs, I believe, are intended to try to undo the arrangement. You know, we hear Hillary Clinton say Trump is upsetting the world global order. Yeah, because sometimes it needs to be changed. Because otherwise what will happen is China will get richer at the expense of the other countries. And free trade is not supposed to be one country gets rich at the expense of the other. It's supposed to be both countries, all countries benefit. That's the wealth of nations, Adam Smith concept.
And in free trade, too, at least in theory, the trade is supposed to balance, and gold was supposed to balance that.
That's right. That's right.
If there were trade imbalances, if a country was running too large of a trade deficit with another country, they were supposed to send gold. And that's how gold balanced these things out. And that's why you have, imbalances now.
Yeah, but today what you can do, if you wanted gold, you just print up money and buy it. Currency and buy it. Yeah. So all that's out the window. The gold standard worked very well. Why don't you quickly mention how that worked again?
So in the past, when there was a gold standard, if there was a country on a reserve currency, if the other country ran too large of a trade deficit, the gold was supposed to leave the country, and that was supposed to curb the trade deficits.
Right. So if your country had a surplus, they would have more gold.
Yes. Yes, but nowadays, though, with a fiat reserve currency and pretty much, every single country on the planet on debt-based digital fiat currencies, there is nothing to stop trade imbalances. And
that's right.
Yes, so there is nothing to stop trade imbalances. So this system, so one thing, I'm not sure if you mentioned this, Louis, you may have mentioned it in different words. So for listeners out there, this was U.S. corporations initially who proposed this system. They wanted China opened up. They wanted to move factories out of here. They did not want to pay increased wages to U.S. laborers. So they wanted cheap labor. They moved the factories decades ago to China for cheaper labor. So they want to improve their profit margins. This was during the stagflation era. So they did not want to pay higher wages that matched, that kept up with inflation. So they were the ones who went to the U.S. politicians, who bought them off with lobbying, and the trade-off was, and this doesn't benefit everyone. If you don't consume a lot, you haven't benefited from all the cheap manufactured Chinese goods. But this has also offset what's the right word here? The offshoring or outsourcing, that's the right word. Offshoring or outsourcing has, to a certain extent at least, Louis, it's offset a lot of this monetary inflation and prevented basically hyperinflation in consumer prices.
Right. So what the problem with China is, had China been a free trade zone, let's say all of China was run like Hong Kong was 30 years ago, and all that the United States was doing was outsourcing to China where there's cheaper labor, the division of labor, and that would benefit everyone. The issue with China is not a free market. China is a top-down communist. They control the currency. They have capital controls. So basically, they're not free trading. They're just taking advantage of, they happen to have the lower labor cost, which is also not good for the Chinese, because that means and then they are not benefiting from the fruits of their labor either, as if they were in, let's say, a more laissez-faire government or entity like Hong Kong. So basically, what's happening is we've just given them the cheap labor advantage, and then they don't reciprocate through free trade. They have capital controls, they devalue the yuan, and the money doesn't leave. And then they use the money that they get to go and buy assets. So they're enriching themselves at the expense because it's not reciprocal. The United States hasn't really become richer as a result of this deal with China.
Yeah, only multinational corporations that were originally U.S. have really benefited from this setup for the last, 4 or 5 decades.
Right. So if you talk about wealth inequality, this was one way of making, and there's a big issue for a lot of Democrats, is that, but they seem to favor the communist Chinese, is these types of arrangements really do exacerbate the difference in wealth, because the people at the top that run these, or financial people that run multinationals, they make the money, and then the average worker doesn't make anything because they're competing with the Chinese.
The Democrats now, Lewis, are also in bed with Wall Street and large corporations. Like the overwhelming majority now of rich people on Wall Street, the overwhelming majority of rich Silicon Valley tech people and people in Hollywood and people in Chicago and people running large corporations are overwhelmingly Democrat.
Correct.
Overwhelmingly.
And they favor almost a Chinese top-down. They like the surveillance. They like the censorship. That's what you're seeing in Silicon Valley, the censorship, the hate speech crimes, those types of things. Those are straight out of communist China. And that's why, just to go off on a sidetrack, it's fascinating to me to see gold bugs cheering on China because it's going to end dollar hegemony and all this other nonsense, that somehow the world would be a better place if the dollar collapsed. And that would mean, because China has gold, the world is going to be a better place. I don't think so.
There's a lot of people in mainland China, Lewis, who do not like their rights and freedoms and the Great Firewall. And what's this new one that you were talking about on one of your recent videos about the social credit?
Yeah, the China is instituting where if you don't have good social credit, they're not going to let you on the plane. They're not going to let you on the public transport. It's the same thing why they want to have the digital currency. They want to cut you off. Look, they have capital controls leaving the country. That's a form of enslavement. Their gold can't leave the country. You can't leave a certain amount of capital. That's the reason they banned Bitcoin. So for people who are cheering on China, that's going to end the dollar, I'm not sure why that's attractive at all.
There's no freedom of speech in China either. So
no, they say, well, there's no freedom here. But the difference is they just came out with another thing where they're going to clamp down more on parodies. You're not allowed to put on television any type of parody. And we do have that here, but that's a direct result, I think, of Chinese influence when you have these large Silicon Valley Democrat-run, hate speech. That's all very similar to what you have in China, but on a much softer level with the censorship. You have Facebook working with China to make sure that they censor stuff. So when we talk about free trade and gold, that doesn't go with China. Gold to China is not some type of product of free trade. It's just an asset that they happen to buy with their dollars.
So if the U.S. does win this trade war with China and Trump's plans work out, he gets a renegotiation, or the Chinese agree to some type of beneficial intellectual property deals for American corporations, wouldn't this still create an enormous amount of collateral damage for American workers in certain industries, for American consumers? So this would not be a clean win. I mean, no. The history of trade wars, Lewis, is basically no one wins. A lot of different entities, workers, consumers get hurt.
Jason, here's the thing. There's already been a trade war, and it's been one-sided, and China has won. This is just fighting back. So here's the flip side. Here's the damage to the United States. And remember, the tariffs so far, the $60 billion, the warning shot, are not on finished goods. If Trump went out tomorrow and put a tax on finished goods like refrigerators and other consumer goods that people use, you'd see dramatic inflation. You'd see price inflation much more than the Fed wants. You would see double-digit inflation, and the Americans would feel it. They go to the store to buy something. Most of the things you buy are Chinese products. That's not where he's starting. He's starting with the steel, and he's starting with a lot of the stuff with the IP. Now, a trade war where the United States said, okay, I know that China is vulnerable. They need this cash flow because they're in deficit. They've got people that they're employed that are relying on sending all these goods to the United States. I'm going to slap tariffs on them. I'm going to cut their revenues in half, and then the goods become more expensive. They become scarce in the United States because people can't afford them. And the United States does not have the productive capacity in a lot of the white goods and a lot of the smaller goods, other than jets and semiconductors. Then prices would get very expensive. There would be shortages. So the United States would feel the pain as well. The difference is, though, if the United States went through that, China is in a much more tenuous position. But it doesn't do the United States any good to crash China, just as it doesn't do China any good. All these gold bugs are pumping their fists. China's going to collapse the dollar. They're going to stand for delivery on COMEX. No one's interest is in anything collapsing. You don't want to live in the United States if the dollar collapses. You don't want to live in China when the Chinese Ponzi scheme collapses, just like you didn't want to live in Venezuela when Venezuela collapsed. So none of that's going to happen because both China and the United States aren't that stupid. It's not like they're both out to get each other. Trump doesn't want to collapse China, and China doesn't want to collapse the dollar, no matter how many interviews you see on YouTube about saying that that's what China's up to. They've had it with the United States. The BRICS have had it, and they start talking about, in the BRICS includes South Africa, India, Brazil, and Russia. These are not countries to emulate that you'd want running the world. So I don't even know why people even think that way, but the BRICS themselves don't think that way. Brazil is on this side of the hemisphere. South Africa, they're not even going to have water in 3 months. So I don't know what influence they're going to have to crush the dollar. Russia and China don't always get along. India hates China, and they're going to probably go to battle up on some other borders up in Kathmandu. So the idea that somehow there's this entity that's working for your gold investment called the BRICS, led by China, I think is ridiculous, and I hear so much of it on the alternative financial media. Maybe that's a good segue into this petrodollar, petro-yuan, which originally started out as a gold-backed yuan, then a gold exchangeable on the Shanghai Gold Exchange, neither of which had any basis in fact, and yet that is what a lot of our friends pumped for the longest time, and that was going to be the gold's game changer, and it was going to make gold go higher. And then they changed it to, oh, okay, well, now that you've pointed out to us that it doesn't make any sense for China to back their yuan with gold, and it doesn't make any sense for them to exchange the proceeds from the yuan-denominated oil contract for gold because China's not going to let the gold leave the country. Then they switched it to, oh, well, this is going to create a lot of demand for gold because the oil producers are going to get yuan, and then they're going to go out and buy gold with it. And that's not what happened. They recently just launched the contract, and now you have a yuan-denominated oil futures contract that trades a few hours a day in Shanghai. And this is not any big game changer. And they keep calling it the petro-yuan because they keep saying that it's going to kill the petrodollar. But what they fail to mention, Jason, is that the petrodollar was far more important 30, 40 years ago when basically it's foreign central banks held dollars because they had to buy oil with them because under the petrodollar agreements, Saudi Arabia agreed only to sell oil in dollars and only to price it in dollars. And Saudi Arabia was, at the time, far and away the biggest seller of oil. Currently, the United States now actually produces more oil than Saudi Arabia. Saudi Arabia's reserves are dropping. And the United States now sends a lot of oil to China, also sends a tremendous amount of natural gas to China. So if you needed an underpinning for the dollar, you can have it based on U.S. oil. But I would argue the dollar is not even based on the petrodollar. It's not based on people having to buy oil from Saudi Arabia, because if that's the only case, well, then they have to buy U.S. oil, and therefore they need dollars. That's not the reason why countries today hold that many reserves in dollars. They have far more reserves that they need just to buy oil. Oil is only about 10 to 12% of international trade, and a greater portion of that is now from U.S. exports. The reason countries hold dollars now and treasuries is because they are liquid, and it's just developed over the last 40, 50 years that is the agreed upon international currency. So when people say that the petro-yuan has come out and that's going to end the petrodollar, I say the petrodollar can end, meaning if the petrodollar based on Saudi Arabian oil, because the percentage of dollars used to buy oil from Saudi Arabia and the amount of treasuries or dollars that countries hold is far lower now than it was as a percentage of their reserves than it was 20, 30, 40 years ago. And it's been replaced by the need to buy oil from the United States, because the United States is now a major oil producer. They are now the number one oil producer in the world, and I think they're fifth in terms of exports, and that's only going to go higher. So you could say that there's a petrodollar, if you need one, it's going to be not backed by Saudi oil, but by U.S. oil.
Well, the U.S. wouldn't have that the top oil production if the OPEC hadn't stupidly done the cuts. I think OPEC has mismanaged some of that. But anyway, that's neither here nor there. The thing about China is that the gold bugs out there who are talking about petro gold back yuan, with this petro yuan contract, China is an enormous credit bubble. You talked about a Ponzi scam. I've heard a number of really credible analysts out there, as well as people who travel all over the globe and have worked in financial markets for decades. Like I interviewed Daniel Lacalle last week, and he said China's growing credit at 5 times what the Bank of Japan, the European Central Bank, and the Federal Reserve are. And so, they can't back their currency with gold because they're going to have to deal with this probably in the next couple years, maybe less than 3 years, certainly less than 5. They're going to have to do another currency devaluation. They already did a big currency devaluation, I think, in 2015. Kyle Bass, the hedge fund manager, was betting on another currency devaluation. He's been wrong for 2 years, but I agree with his thesis. Eventually they will, because look at their credit growth. In the last 10 years, they've grown their credit to almost 40 trillion US dollars in their internal economy. And people are like, oh, all that debt's internal. Well, they only have 3 trillion in foreign trade reserves to handle that. That's not enough. And so, yeah, maybe they have 20,000 tons of gold, but at the current gold price, that's not enough to cover those losses in a credit bubble. So, I just don't see the argument there where they're going to be able to back their currency by gold. I think, the people, it's hopium. The people they're not rationally looking at the problems that China, in my opinion, Lewis, I don't know if you agree with this, I think China financially 10 years ago was in better shape.
Oh, absolutely. They went for in 2009 to lead the world out of the global recession, and they went into hyperdrive. They poured more concrete in 5 years than the U.S. poured in 100 years. They borrowed all that money. China is a massive Ponzi. And what people miss, and Daniel Lacalle, I don't think he says it Lacalle like a Spaniard, but I think he is Spanish. But I think, how do you pronounce his name? Daniel Lacalle?
He is a Spaniard. He's lived in London for a while. He said Lacalle, but I said Lacalle. But
okay. So what he pointed out was, and this is a point of view I subscribe to, what gold bug, or I don't know if they're gold bugs, but just people who have this China worship and U.S. bad, China good, that they point to the United States massive deficit, and I agree 100% they're right there. They point to the unfunded liabilities, but then they act as if Europe hasn't been running QE for 4 years. Japan, China, they just ignore the entire credit. The issue with the world and the real case for gold isn't China versus the U.S. It's gold versus every other fiat-run country, central bank, and so on. China is in no position. It's not like some prudent central bank or some prudent economy. It's not. It has probably 40% bad debt on its state-owned enterprises because their state-owned banks just loan money for non-economic projects that don't make any money. And when they can't get paid back, the People's Bank of China says, extend the loan, do what you got to do, convert it into equity, or lend them more money. That's not a sound economy. So gold is the real value of gold is not China is going to crush the dollar. It's that all of these countries are going to fall under the weight of their own debt. And it's not just the United States that has the debt, but as Daniel has pointed out, the United States is actually in a better position than all the other highly indebted and leveraged countries and economies.
Yeah, I mean, this is a shocker to me and most people. Initially, when I started learning about all this, I thought the U.S. was in the worst shape. But the mistakes that these other countries have made has been just as bad, if not worse, in a lot of cases. Like 10 years ago. So China 10 years ago, before they started all this crazy credit growth list, I think they only had maybe $7 trillion in debt. They had $4 trillion in trade surplus reserves, plus the gold they were buying. That was reasonable. Okay, that was manageable. Now they've just gone nuts with it.
Yeah, who's in good shape is Russia. The Russian central bank has nearly $500 million in foreign reserves, has about 80, 90 billion in gold of about 1,800 tons. It's got about 100 billion in U.S. Treasuries. It has a little bit too high of an inflation rate. It's the second largest oil producer in the world, and it's under sanctions. And it's managed to somehow hold on to a relatively low debt, prudent central bank. The problem with Russia is they're not a big player in terms of growing their economy, but they're also not heavily leveraged and highly in debt. So Russia's in good shape from that perspective, but Russia can't exist on its own, and all the other countries have this debt Ponzi scheme going. So they're tied into it too. They can't survive if China goes down or any of these countries or trading blocks go down.
We'll be right back with Louis Cammarosano of Smaulgld after a word from our sponsor.
Do you work out routinely and eat healthy almost all the time? If you eat paleo or vegan or work out routinely, you may be eligible to save up to 33% off on your life insurance thanks to Health IQ. Health IQ is a venture capital-backed, big data technology life insurance company that offers customers life insurance at special rates by using the latest technologies. For more information, please go to healthiq.com/WS4MS. That's healthiq.com/WS4MS. Those sanctions that they tried putting on Russian exports, they actually surprisingly have benefited Russia. They forced Russia to be more self-sufficient and do more innovation. So I'm hearing that Russia's having a renaissance with their agriculture.
Well, it's interesting. You're not old enough to remember this, but there was a point where Russia could not feed its people in the Soviet Union, and they used to have to buy grain. There was the great grain robbery where they bought grain from the United States because they couldn't grow it themselves. But now they've got some decent, you're right, some decent agriculture, and they're somewhat self-sufficient.
Yeah, Stalin also stole a bunch of grain from Ukrainians, and he murdered over 6 million Ukrainians to sell grain on the open market. I think this was in late 30s, early 40s. I saw a documentary about it. I forget the exact years, but it was an enormous crime against humanity, by a brutal dictator. But, the whole point of this, like you said, is that the global macroeconomic picture, Japan is a mess. They're a basket case. Japan's been doing QE longer than anyone else.
Right, for 25, 30 years.
Yes, and the Japanese saver has subsidized and allowed their government and their central bank to get away with it.
Mm-hmm.
And, Europe is a mess now. Europe has basically they've been doing more QE than the U.S. has for years now. The ECB balance sheet has exploded.
Bank of England, same thing. Swiss National Bank. Even the Danish national, even the banks that are not in the EU but are in Europe are doing the same thing. They're buying corporate bonds. They're not just monetizing their own debt. I think you told me that, I think it was in Zero Hedge too, but 40% of the world's GDP is locked inside these central banks.
Yeah, Dr. Harold Malmgren, who also thinks that the U.S. In the next global financial system and after the next collapse, the U.S. will come out on top still. He put on his Twitter feed a couple of weeks ago that 45% of all global GDP is on central bank balance sheets, and that includes the People's Bank of China.
Yep.
And so, that might be an underestimation. So that's just what they've released publicly.
Yeah,
that's not the real books.
This is why the stock market has not gone down in 10 years. It is inconceivable. If you look at the stock market of the 50s, 60s, and 70s, it didn't always go up. It would go up, it would go down. But now it just continues to go up, and that's basically central bank liquidity. Not just buying shares outright, but buying whatever financial shenanigans they do to add liquidity. That keeps the stock market afloat.
Exactly, and that's not
Stabilization fund. It's all the central banks working in unison to boost the markets.
Exactly, and that's not free markets, and that's not capitalism.
Nope.
And that's why Warren Buffett, who's like Mr. Value Investor, finding market inefficiencies, that's why he realized the central banks had rigged the stock market, and that's why he made that bet with the hedge fund manager. Remember the famous one where he bet that an index fund, $1 million, he bet $1 million to the hedge fund manager that him picking out an S&P 500 index fund would outperform the 5 best hedge funds that this hedge fund manager could pick. And that's because Buffett knew that the central banks were committed to this strategy of at all costs not letting the stock market crash again.
Right. And that's why, people say Trump's an idiot for going on about the stock market. He knows he has the Exchange Stabilization Fund. This all started in 1987 when the stock market fell And Alan Greenspan was newly appointed by Reagan. He jumped in and he said, we stand ready, willing, and able to add liquidity. And that was the beginning of the recognition that it wasn't just the dollar that was an asset of the United States, but it was the stock market as well, because it attracted dollars from overseas back into the United States, into the stock market. So ever since 1987, we have not had any sustained, even in 2008, it's a couple of weeks, and then it came roaring back. They knew that they needed to protect the stock market. They would do QE, they'd do whatever it was. They would temporarily let the dollar go down as long as they could protect the stock market, but ultimately they always protect the dollar, because the two work hand in hand. If you don't have the dollar, you can't control the stock market. And they've been very adroit at doing that, and since 1987, you just put the money in the stock market, forget about it. You don't even have to do stock picking. It could be any company. It doesn't even have to make money. It could be like Tesla, Zillow, any of these companies, and you're going to make money. And then if you're prudent and you think about gold and silver, look at silver. 10 years, the price is lower today than it was in 2007, 2008. Unbelievable.
And silver, a lot of primary silver miners are getting out of the silver business. So I don't know if you saw that last week or two, I did a short video about this. And so primary silver miners, a lot of them, they used to only mine silver and have some base metal byproduct. They would have never mined a lot of gold in the past, maybe only a little bit of gold as a byproduct or something. Now you have Hecla, Coeur d'Alene, Silver Standard, which changed its name. Even Fresnillo, all these large primary silver miners, they all have enormous amounts of revenues in gold mining.
And you know what they now say? They call silver when they put out the results. They say ounces of silver. It used to say, and ounces of gold. Now they do silver equivalent ounces, which includes the gold in it. Because the gold-silver ratio in the last 5 years, silver has lost 48, nearly 50% of its value versus gold.
That ratio is broken. So I did a short video on this a couple months ago, where I think there was a big divergence in January 2016 where silver was about to break out. It was correlated. Silver and copper have correlated very well for a long time, and that correlation totally broke in January of 2016. You can see it on the chart. I showed it in the video. And so silver was about to, I think, break out to $21 an ounce and go higher. It collapsed, and it hasn't done really anything since, but in a trading range or go down.
But gold and copper have grinded higher.
Well, copper didn't just grind higher. For a while, it went above 30%, and now copper's having a big correction because, the market was flooded with lots of copper. There's a lot of marginal copper mines out there. So the experts like Eric Sprott and Craig Hemke, Turk Ferguson, I respect them, but I disagree with them on this issue. They're saying it takes 10 years to bring a copper mine online. Because the copper price at one point only, 7 or 8 years ago, was $4.50 a pound, there was a lot of money put into exploration for copper. And so some of those really high cost, low marginal copper projects, they were shut down when the copper price went lower than $4 a pound or $4.50 a pound. Those were put on care and maintenance, those mines. And so those mines, the exploration dollars were there, and they could be restarted in a matter of months, because it's not like they have to start exploring again. There's copper mines that are temporarily shut down on care and maintenance. Yeah, so, and there's enormous, because of those copper mines, like one of the main byproduct of copper and lead and zinc mines is silver. So there's been, and those base metal miners don't care what silver price they get. They hedge almost basically all of it.
Right.
So there's hundreds of millions, and there's, I think, from looking at the numbers, Lewis, in annual silver supply, I think it's 2 to 1. It's like 66% versus about 30% of
primary and secondary. Well, that's going to go higher.
Yes.
As the primaries start to wind down or shift some of the resources to gold.
Yes. Yeah, the majority of correct. The majority of annual silver supply, over 2/3, is from silver byproduct. It's not from primary silver miners. And as I said earlier, really only First Majestic Silver and Pan American Silver seem committed to not going out and buying gold mines and getting most of their revenues out of silver.
Well, that's why Keith keeps saying $150 silver. He needs that higher price. It's $16. And I know that I think that First Majestic, I don't know which one it is, but a lot of them are in the $12, $13 range. Some get a little lower than that, but I think that's also when they include their gold mining and they do silver equivalent ounces. But $16 an ounce is not a very good price for silver if you're a silver miner, for sure. Because the gold price is now $13.40, $13.50, and that's up over the last couple of years since the end of 2015 when it was 1150. The end of 2015, silver is about 15 and change, right? So it hasn't really gone up that much. It's not gone up the same way that the gold has gone up.
And all the costs that can be cut in gold and silver mining have been slashed to the bone. There's really, at the actual mine, there's no more cost to cut. So they could cut, theoretically, the management teams could take pay cuts. They could fire, I don't know, executive vice presidents or their uncle's son or something, extra payroll that's being kept along in SG&A. That's being kept along from the executive teams where there's waste. Some of these mining executives still live lavish lifestyles, but actually at the mine site, there's really no more cost to cut. And from interviewing Nolan Watson, who I think has his pulse on the industry the best because he sees all these deals go through, whether they're building a new mine and a company's looking for capital or it's a producing miner looking to repair their balance sheet, he sees these deals come across his desk and he turns down almost all of them. And what he said is that mining costs, after being slashed to the bone during this paper bear market for years, are rising again. So those margins, you said cost for mining silver were 12 or 13. I don't think they're 12 or 13 anymore. I think they're starting to rise. And I think that's why those primary silver miners are getting out of the silver business. They have silver mines that they could put into production years from now, but almost none of those new silver mines can be economic below $25 or $30 an ounce.
Well, one thing that people following silver, and I follow it very closely, are missing, there is a trifecta in diminished silver demand. We keep hearing how silver is so useful in electronics, more and more electronics, but the actual amounts of silver demand for electronics in 2010 was 310 million ounces. That was down to 233 million ounces in 2016. They use less and less silver in electronics. They're smaller. They use less and less silver in solar panels now. They now can use nano silver. They can use aluminum. And then also what's really been dramatic is we did have a big increase in investment silver demand from 2009 to 2015. I used to do full reports on this. And in 2015, the silver demand from the U.S. Mint, the Canadian Mint, and all the silver privately minted rounds was so big that demand was almost 25% of overall silver demand, which pushed, when you took that and jewelry and non-industrial uses of silver, to almost 50%. So industrial silver in 2015 was only about 51%, depending how you calculate it. But in the last 2 years, in 2016, 2017, and this year, just for example, the American Silver Eagles peaked in 2015 at 47 million. In 2017, it went down to 37 million. Last year, it went down to 18 million. And this year, I think we sold 3.5 million in January, less than 1 million in February. We'll probably sell about 1 million in January, so it's about 4 or 5 million. The United States Mint may only sell 10, 11 million Silver Eagles in 2018, and that's the same across the board at the other mints. So the demand for electronics, the demand for solar, and the three biggest demands, and the demand for silver rounds and bars is down. So I keep hearing people saying silver's got to go up because demand is exploding and supply is diminishing. Both are diminishing somewhat.
Well, there's demand increases in India and China, but you're correct about the U.S., the western part of the country.
I'm looking at overall. I'm looking at overall. I did report on. I report every month on Indian silver demand. Indian silver demand was up 52% last year from 2016. But
I know. I watched your video.
Yeah, it was down from 2015. So demand this is important. That demand for physical in China, in India, the two biggest gold and perhaps silver consumers, has been relatively constant at an elevated level since 2012, 13, 14, 15, 16, 17. That hasn't gone down. What's gone down in the West and in industry is silver has gone down in industry and has gone down in investment demand since 2015. And unfortunately, a lot of the Western silver demand in Germany, in the United States, and England is in the form of ETF-style products. So people say, I'm going to go buy silver, I'm going to go buy gold. They buy an ETF. They don't go out and buy gold. And we're seeing that when you have these extremely low U.S. Mint numbers. I think the U.S. Mint numbers for gold are like an individual can buy the amount of gold that the U.S. Mint's been selling the last 6 months.
Wow. Well, sentiment in the West has totally collapsed. I mean, when I do gold videos or interview gold and silver experts on my channel now, I do get comments now saying, why do I bother even saying anything nice about it or covering it at all?
Well, there is a crypto. There are a lot of people that are just like jumping up and down on crypto. But now that the prices have gone down, there's perhaps probably less interest in that too.
It's a good point. Yeah, the Western investor doesn't really buy value, is not contrarian. People are more like my dad. They like buying things that's going up. So I asked my dad why he buys things, and most of the time he says because it's going up.
Yep.
And so as a value investor, as someone who looks at financial statements, who's contrarian, I like buying normally when there's blood in the streets, at least doing research on stuff where there's blood in the streets. That worries me. But, you know, it's my dad's his money, so he decides what he wants to do with it. Although I think, unfortunately, he was buying Tesla shares last year. So, but anyway, though, so let's transition a couple more questions about China. So you saw my video about China's One Belt, One Road. Do you agree with my thesis then that they don't care if it's economic, that this is basically they're willing to lose money and have a jobs program, and they don't care if they blow through a lot of their trade surplus as long as it keeps, prevents political revolution and also prevents like unemployment from spiking?
Yeah, basically, my view is similar to yours, is that they have already built enough bridges to nowhere, enough roads, enough skyscrapers that they can't use, that they have to go and make more non-economic projects around the world. Which is interesting, what nobody covered, I did a full video on this, was that the United States and Japan and Australia are also in the process of setting up a Belt and Road investment initiative, so that they also not just they don't want to compete with China. What they realize is that there may be a lot of these projects that China does, as you say, just to do them, just to get some projects done and to get some people put to work. But some of those projects may need, for example, they build a bridge to nowhere. Maybe they can come in. They're called the Quad. The four countries, India, United States, Japan, will come in and help them and actually pick up the scraps there. Or if there is a good project, what this Quad group would do, the U.S.-led Quad group, would be, let's say China goes in and there actually is an economic case to build a bridge or to do something, an airport. The United States would go in and bid on it and actually undercut China because they know that it's a good deal, or force China to make a bad deal. So it looks like, China goes out there, makes this broad, like the spouting whale, they're going to get harpooned. They're going to do all this Belt and Road stuff. Well, it looks like the Quad is ready to either profit from it or to make China pay a little more. And there was a case where Japan went and tried to run interference with a Pakistan deal, and that must have meant it was a good deal. And at that point, Pakistan said no, but we're going to see, I'm sure, many cases where the Quad bids against the Chinese Belt and Road Initiative, and you may see the Chinese make dumb deals just because they know they got to get the business, because, to your point, they need to expend the capital, and they need to keep the people working and to keep the game going. And if they have to build a bridge and it's going to cost them more, well, they're going to lose money on it anyway, so they might as well, bid higher and build the bridge. And that's why going full circle, it's important that they continue to make money from their exports to the United States. They don't want to lose that. Everybody keeps saying China doesn't need us. Nonsense. They need that cash flow to continue to support what
they need to run. They need to run the trade surpluses so they can subsidize the losses,
right,
either from bailouts of their banking system or their municipalities, or for these non-economic jobs programs that they're running.
Right.
Yeah, and so China has a lot of problems. A lot of people in the alternative financial media, alternative media community, and gold bug community will not admit that China has enormous financial problems now.
They all say the same thing. That's the issue. They don't do independent research. They repeat what the other one says. All you have to do is put up a death to the dollar, death to the petrodollar, and you're going to get 80,000 views. You say the same thing that everybody else says, and then everybody insists because everyone else says it that that's the case.
Fear porn sells, right? So
yeah. Oh, I know that.
Well, let's transition to cryptocurrency then in the last couple of minutes of the interview for the last topic, since I know you covered that as well. So, we've had a huge wipeout phase of cryptocurrency. I was warning people, especially for a lot of these altcoins I never heard of and initial coin offerings, to stay away from those. While in 2017, a lot of these cryptocurrencies were going bonkers. How much longer do you think this wipeout could last? Could it last another 12 months or 2 years? Or do you think that a lot of the negativity is just about done?
I think the negativity that we have, it highlights that most people in the space don't understand the space, and that's totally understandable. But if you understand it to a certain extent, and you actually think that capital wants to come into the space, but capital needs to understand what it's investing in, wants to have the type of normal protections, wants to understand what the tax liabilities are. What you have is a divergence between the first crowd of people who are in it for the anarchy. They were in it for the let's end central banking, let's do this thing on our own. They're frightened to death of anything that has an R in front of it. Regulation, they don't want to hear about it. That gets them skittish, that wants them to come out. Regulation, however, is also making people think that it means ban. It means shut down. It means seize my assets. It means arrest me for money laundering, things like that. What I think is happening, and if I'm right, what's going to happen over the next 6 months to a year, is the regulatory environment will be clearer. And when it's clearer, there'll be more capital coming into it, and that will cause them to rise. Now, it won't cause the same type of rise that we saw with everything with the altcoins. The crackdown is on ICOs. The crackdown is not on Bitcoin, Litecoin, Ethereum. They're already out there. They're not companies. They're not making promises. There's not an entity that's committing fraud. What the SEC and with the other regulatory bodies are concerned about are two things: fraudulent exchanges, or exchanges that are not up to snuff for checking out things like know your customer, understanding the when your exchange might be being used for manipulation and so on. And also they're worried about ICOs that are basically pie in the sky, make 100 million, 200 million just off of a white paper. And the problem with that for regulators is that investors get screwed. But I think the bigger issue is that the regulators see that their banker buddies, their lawyer buddies, their accounting buddies are not making those fees that they would otherwise make like they make on IPOs. My view is that the regulatory environment, so for example, every time there's a regulatory spook, the prices go down. So for example, when Japan told a Hong Kong company that they had a problem with Binance was doing because they weren't licensed in Japan, Bitcoin goes down. That should not make Bitcoin go down. That means that Japan actually wants Binance to register so that they have control over the exchange. Now, to the anarchists, they don't want the control of the exchange. Well, technology can solve that too. There's off-swap exchange, there's lightning networks, there's atomic swaps. All that development work is going on. At the same time, the centralized exchanges are coming under scrutiny, and that should be for a normie investor a good thing, because now they have certainty that they somehow have some regulatory body looking out for them, and they're not going to have all these fraudulent ICOs. So when all the fraudulent ICOs or just the ICO froth moves out of the system, I've been tracking what I call burble, which is Bitcoin, Ethereum, Ripple, Bcash, and Litecoin. I think that the top 5 coins, a lot of that money will roll up that otherwise would have gone into the speculative ICOs that are going to go away because they're going to be regulated out of existence. And then you'll start to see new ICOs that are Silicon Valley sponsored, Wall Street Valley sponsored, with lawyers and accountants all doing registered ICOs. Then more money will move into those as well. So I think we'll get more clarity in the next 6 to 12 months. And if we get the right kind of clarity and we don't get bans, which I don't expect them to be, because that doesn't seem to be where any of the countries are heading, they seem to be regulating, that more money will flow into the system. And you'll have funds that'll basically be Bitcoin funds, and then the top, the burble, the Bitcoin, the Ethereum, Ripple, and so on. And I think money will flow into those coins and then also the registered ICOs.
Yeah, only China is really banning, and there's a lot of ways around that. There's a lot of mainland Chinese that have figured out ways around that. But to add to your points there, so South Korea didn't shut down their cryptocurrency exchanges. They wanted the exchanges to register customers so they would know the customers. Right. They wouldn't be anonymous, and so the customers then would have to pay taxes.
Right.
So
they want to cut. Japan too. Japan is perfectly
Yes.
fine with it. Australia, the United States is, if you listen to and I listened to both of them, the Congressional and the Senate hearings on it, they weren't talking about shutting it down. They weren't worried about threats to central bank. They were just worried. They weren't even worried about taxes. They were mostly concerned about regulation of these bad ICOs. They wanted the innovation to continue. They want to make sure that these are good and new ways to raise capital. They just want it to be done properly. They want their fee. They want the bankers to be involved. They want the lawyers to be involved. And they want the exchanges to act like basically Fidelity, Schwab, and so on. A lot of people get, oh, look, the regulation is coming. All the regulation that they're proposing and have now imposed on cryptocurrencies already exists for gold and silver. If you don't pay tax on your gold and silver gains, it's the same issue. But everyone knows they have to pay tax on gold and silver gains, just that they don't have any gains, so they never have to pay taxes. But you also have the same money laundering issues with gold and silver, plane tickets. You can launder money with any asset that you don't buy that's tracked. And the thing about Bitcoin, it's even easier to track on an exchange than it would be for people who go out and buy off-grid gold and silver.
That's a good point. And the easiest thing to launder money with is actually US dollars.
Correct.
So that's what the majority of money laundering is done with, because there's literally tens of trillions of dollars floating around all over the planet.
And they're almost all unmarked.
Yeah. And so, that's like, if there's one thing I think the governments want, they don't want to kill the cryptocurrencies. They want to hijack the technology, because there's tons of people, whether they're in the United States or the European Union, who don't pay taxes on a lot of transactions. And so they could take blockchain technology and they could, start banning cash or eliminating cash. They're already, a lot of these Keynesian academic economists are, like Ken Rogoff, are demanding $100 bills or lower be banned. And there's people that want even more radical bans on cash than that. And if the governments force everyone into digital government cryptocurrency, if you're a rabble-rouser, you dissent and speak out against the government, they can shut down your credit card or your bank accounts literally within minutes. Or if Congress or whoever votes on a new tax, it can be implemented almost instantaneously.
Yep. The other thing that I believe is happening, and this doesn't please the original anarcho-capitalists and Bitcoin crowd, is that what they're trying to do, and they keep saying they can't do it. They can do it if the user wants them to and allows them to, which is integrate all of the cryptocurrencies into the existing payment system and subsume it. Now, of course, there's ways to get around that. You can do things outside of payment systems, but it seems that the average person who doesn't know any better would prefer to have a BitPay card, credit card, that has 6 of his cryptocurrencies on there. He can go and spend them. Well, now all of a sudden, Visa has a incentive to want to roll this stuff into the system, and all these whiz-bang things that you can do off blockchain and no one knows about it, they become less attractive because people are used to being herded into one place and having their transactions viewed and taxed. Now, the beauty of all this is you can have both. You can have the government can enjoy the tax benefits. If the bankers can manage to corral a good portion of the crypto market into the payment system, they don't have to get it all. Well, then they avoid going out of business because at least they're controlling part of it. Whereas if everyone went outside, the unbanked went outside the banks, then they crumble. What I think you're going to see is you're going to see 60, 70, 80% of transactions running, and people won't know the difference, that they're either on the Bitcoin block, whatever they are. They're going to be in part of some type of controlled, regulated system. And then you're going to have stuff outside the system. And most of the stuff outside the system won't be illegal, but some of it will be. And, of course, they'll go chasing after people that are doing money laundering and all types of bad things with cryptocurrencies. But for the most part, I think there's huge money in this, and it'll all be correct. Not all. A good portion of it will be corralled into the payment system, into the banking system, into ETFs, into all types of Wall Street stuff. I don't view that the banks are looking at this as a existential threat. I think they have that in the back of their heads if they don't do something about it. But I don't think they're going to take it head on and try to convince their governments just to ban it. I think they're going to try to corral it through regulation.
They've been also hiring computer programmers, and they're looking at taking private blockchain with the blockchain innovation and implementing it into their back end and middle transaction software. So if you buy a stock, then the blockchain would, rather in the past, there were a bunch of employees handling office work in the middle part of a transaction or the back end if you bought a stock or traded it. And whether now that part will just be handled by blockchain and computer software. So that's ultimately where they want to go. That would mean cheaper costs maybe and better profit margins for the bank. For human being workers, that would mean less jobs.
Right. And the other thing they're interested in, though, is also the trading revenues. I know Fidelity did a deal with Coinbase. They're thinking of, they already can, if you have a Fidelity account, you can already access your Coinbase account from your Fidelity. There's Abra, which is a system where you can trade cryptocurrencies. American Express is involved with that. So you clearly are seeing there's money to be made, not just from co-opting by, creating your own blockchain and using the technology, but by taking the value in the cryptocurrencies, the trading revenues, the increased appreciation on these assets. Japan likes it because it's a Keynesian dream. If all these assets rise in price, if Litecoin goes to 12,000, Bitcoin goes to 100,000, people are going to spend those gains, and there's going to be tax to be paid, and there's going to be revenues made by merchants who are going to be on the receiving end of a spending boom. And then there's going to be fees and payment processing fees. So I actually think they don't view this as a threat at all, as long as they can keep the mindset that these assets are going to be traded just like you trade on your Fidelity, Schwab, Ameritrade account, just like Goldman Sachs, JP Morgan trade stuff, derivatives, futures. That's why CBOE is now saying that they want the SEC to approve ETFs. This is not the Winklevoss twins saying for their own benefit they want it. This is the CBO. They know there's money involved in cryptocurrencies. That's what they care about.
And Keynes also wanted a one world currency. He wrote about the Bancor. So, with the global blockchain and how it could update instantaneously, there's now the possibility for a lot easier one world currency. So this is kind of the wet dream now of these globalists, these economic and political elites who want full top-down control over so many different systems. They have the technology available now to potentially implement it. Now, with that being said, Lewis, a lot of my listeners to this podcast are diversified and they own cryptocurrency. I do as well. I know you do. So are you hodling here? Are you adding to positions? In your opinion, do you think getting cryptocurrency exposure is a good diversification strategy?
Well, I'm not a big investor. I get it through people donate it to send it. It's for donation, and I've learned a lot just from getting that. We're talking about diversification. There's a lot of people out there that are totally against cryptocurrencies, and I was one of them. I was totally against cryptocurrencies. I thought it was the stupidest thing I ever heard of. You're placing value on numbers that didn't mean anything. Why would you want to buy into this artificial scarcity when you can actually have something that's real, like gold or silver, that has properties, or you can have the benefit of work from a company that actually produced a good or service and get value that way? This whole crypto thing seemed to me was, yeah, it all works, and I understand you spend the mining money and the electricity, and you can verify a transaction, but it's a transaction of what? A bunch of numbers. And I did not see the value, and I was against it for that reason. However, the reason I see value in it now is not because my view has changed. It's because that the market has given it that value. And a lot of people say, well, we're going down the wrong pathway here because this is how we get to one world currency, global enslavement, everything on the blockchain. Well, that may be. However, the example I like to give, that's what I was struggling to remember, is you may be against all that, but your only options is two options when you see a overpowering technology coming your way. You either retreat from it and stay away from it and go live your life, and maybe you churn your own butter and you have chickens and you try to stay out of the digital world, or you have to arm yourself with that technology. So, for example, the Native Americans were probably not happy when they heard guns blasting on their terrain, shooting their buffalo and so on, but they realized in order to stay possibly in the game, they could retreat, but they'd eventually get found. They had to find arms themselves. So if you're going to deal with the worried about a totalitarian government based on technology, I think the diversification is that you need to understand it, and there are certain technologies that are not NSA backdoor compliant and so on. There are technologies that actually allow people to retain their privacy. Now, you could say anything could be hacked, but that's true. But at least I think in today's world, You can't just retreat and say, I'm against this, especially if too many people are agreeing that it has value, because what you think really is irrelevant as to whether people are going to value cryptocurrencies. And if you look at millennials, they think that this is money.
They think it's great, and they're used to buying things on their phone. They're used to buying things in a video game, paying for in-game purchases.
Right. You give them a piece of gold. You've seen with the Mark Dice, that was even before cryptocurrency. They take the chocolate bar. So they don't understand those values. So it's not up to me to say you shouldn't be valuing this way. That's how they value it. So yes, but you should, to diversify, you would think you'd want to have things that other people value.
But I think in the environment we're in, where the rules can constantly be changed, maybe even on a daily basis going forward, I think it's very dangerous to put all of your money into gold and silver, or put all of your money into. I mean, look, if you had put all of your money into Bitcoin, and Bitcoin now, there's an argument to be made there that Bitcoin's losing a lot of its ability to process payments. So we'll see what happens with the Lightning Network, SegWit, and also atomic swaps. But if those things don't work out, I mean, Bitcoin's going to continue to lose market share to competitors.
Correct.
So to bet on any one thing and consider yourself diversified because you own one or two cryptocurrencies, or you own only one or two gold or silver mining stocks, or you only own physical gold or silver, you're not diversified. No. And I think that's the mistake that the majority of people are making is, they see something going up, they see one thing's doing well, they sell other investments or assets, and they buy more of that. And, that's a gambler's mentality. You're trying to get rich quick. It's very dangerous.
I agree 100%.
And, there was a lot of people commenting when I was doing cryptocurrency videos in 2017 that, we were going to have Litecoin at $2,000 by the end of this month in March of 2018. Yeah. I mean, nothing goes for a while. The cryptocurrencies went straight up, but nothing goes straight up. I mean, there's a whole army of Ripple pumpers on Twitter. I'm sure you've seen them. And for me to suggest when Ripple was $3-something a coin, a token, that it was going to crash and have, a huge wipeout, they were like calling me all kinds of really nasty names. And I was like, the more I researched Ripple, there was a lot of things wrong with it.
Well, what happens, I see, and it's the same in gold and silver, you get to the point where people are so emotional. Someone says, oh, I sold my silver, and then it becomes he's a traitor. I mean, or he's lost his integrity. I'm not sure how you can attach some type of moral judgment on an asset that you own.
Well, people become emotionally attached, and so it's that way. It's that way with stocks. It's that way with pretty much anything.
Isn't one of the rules of investing don't fall in love with the stock? The same thing. You end up becoming like Gollum, hey, precious. You have to, and then you start to think ill of somebody because they're not out there pumping gold and silver 24/7. Or the same with, the Bitcoin people are the same issue. If you don't believe in Bitcoin, then you've said something nasty about their mother automatically. And these are just assets, and they come and they go. Oh, no, they don't. Gold is money, period. Gold has always been money. You could say that about horses. Horses were transportation for 5,000 years, period. That doesn't mean they're always going to be transportation. But people who talk about, you say something about gold, negative, or Bitcoin, and if you're dealing with a person who's not that invested, you can argue it, you can debate it. But once you've crossed the line into religious fanaticism over an asset, there's really no talking to anybody about that stuff.
Agreed. As long as people keep it away from name calling and personal attacks and stuff like that, I think that's kind of the line I've drawn, because there's been some people that just they've gotten way too emotional about things. But you can't control how people are going to react.
That's right.
To when we put this content out there. So I'm sure there's going to be nasty comments in the comment section, like, why did you have Lewis on? He's a traitor. I'm sure we're going to see stuff like that in the comment section.
Oh, yeah, I love it when people say you're a shill. Shill for what? I mean, if you know.
Yeah, you're definitely not getting rich off saying anything you're saying. So yeah, it's not like
I don't make stock recommendations. I don't do any of that stuff. So I'm not shilling anything.
Yeah, it's confusing. So I think they've gotten
any of that stuff.
Yeah, the funny thing is, in a lot of cases, the content that they're listening to, a lot of it's even in the alt media and gold community now, it's turned into propaganda.
Yeah.
where you got to look at the people's track record. So I haven't, there's commenters out there that have been calling for a stock market and other crash, dollar collapse every 2 or 3 months now since 2009. I haven't been one of those people, but people lump me in there because I cover gold and silver, but I'm not one of those people.
Right. But the thing is, the minute you indicate that maybe, like what I do now is I've convinced myself, not because I want to, but by looking at the data, that gold and silver are not the same, and that silver is not destined to skyrocket, and that I've predicted this higher gold-silver ratio because I see significant differences that are not mentioned by the people who just pump silver. So it's rational to me that it's not at 16-1, and that it's not going to 9-1. But the people have heard it so many times, they think, you'll see, you don't understand, and you can't show them any data that'll change their mind because they've heard the cherry-pick data so often. Silver is so useful in our lives. How much silver is useful? How much is being used? How much is being needed? Is silver really a substitute for gold? No, it's a different metal. The central banks hold silver. There's so many differences between gold and silver, and there's a reason the gold-silver ratio is higher. And it's not just, and it is to do with manipulation, but manipulation of silver is easier to do. It's a smaller market. That's another reason that the gold-silver ratio is as high as it is. It's much easier to clamp down on silver than it is to clamp down on gold.
Well, Louis, we've gone way over the time I thought we were going to do for this interview, but there's a lot of great content in here, a lot of controversial stuff too, especially if you're a hardcore gold and silver bug or you only like crypto. So I think you're the voice of reason in in a lot of different industries where there's not a lot of reason sometimes.
Try it. I'm trying to be objective. I'm not against gold. I'm not against silver. I'm not against cryptos, but I'm not also a perma-bull on any of them.
Yeah, and I just try to examine the facts of the market. So when I'm saying that the silver miners are getting out of the silver mining business, it's not that I don't like silver. I'm just saying that the silver miners can't make margin in the business. So a lot of them have moved their revenues to gold mining where they can make margin. So, they don't want to go bankrupt. They don't want to lose their their stock options and lavish spending lifestyle and nice salaries. They don't want that. So they're going to figure out ways to keep their business. And so a lot of those companies have gotten out of the silver mining business and into gold mining.
Makes sense. That's where the money is.
But Louis,
where the money is.
For now, yes. We'll see what happens in the future. I think, there's a lot of artificial supply of silver right now, and it's from all the base metal miners. Mm-hmm. So there, in my opinion, in my estimates, there's well over 100 million ounces a year of extra silver that should not be online right now. That is. It might even be a couple hundred million. It might be over 200 or over 300 million. I haven't dug into all the individual mines. If someone wants to go out there and do that and look at production costs for those copper and base metal miners and look at which ones are marginal and how much silver is produced out of that, that's a project for them. But, until that silver supply comes offline, there's a lot of extra supply online that should not be there.
And demand is not skyrocketing, despite how useful silver is.
Well, a lot of people also don't believe that there's any inflation. So they believe the government numbers still. So, I hear tons of talking heads say there's not enough inflation yet. So, as more and more, maybe with this trade war wrapping up here, as this trade war, we'll see what happens. I'm not in favor of it. If the U.S. does, and I'm using air quotes, win a trade war with China, it's going to force higher stagflation than throughout the supply chain in the U.S. Maybe some individual industries, some workers in those industries and protected industries will benefit. But overall, I think U.S. consumers and people in a lot of other industries are going to be collateral damage, and their costs are going to go up.
If it goes past the initial $60 billion and goes to finished goods, that's definitely true.
Well, the trade wars, Louis, we didn't get a lot of time to talk about Smaulgld, but these trade wars, they tend to have a history, if you go back and look, of escalating. So we'll see how China, a lot of it depends on how China wants to retaliate and then how the U.S. reacts to that. So it's a cat and mouse game. So to say for sure that one thing or another will happen is very low probability. But looking back through history, normally these things are retaliatory. So I think this could go on for a while. As long as Trump is in office, this could go on for. So if Trump wins re-election, if the Democrats don't take back, one or both houses of Congress and Trump's not impeached, because if the Democrats do take back one or both houses of Congress, the probability of Trump being impeached will be very high. then Trump seems intent, because this was a campaign. Last thing here, this was a campaign promise for Trump.
Correct.
So I was talking about this before Trump won the election, that, oh my God, he really does want to do this. He's talking about this in, all of his speeches. He's selecting advisors that specialize in this. He's serious about doing this stuff.
Right.
Very, very serious. He had been talking about it in articles and decades for trade deals and tariffs and things. So this is not something he just concocted in the last couple weeks. He's been talking about this for a while, about doing it.
And he's doing it.
Well, he's definitely made all of our lives interesting. There's going to be almost unlimited content now, and how things are changing.
That's true.
Yeah, look at the media circus he's gotten. Who would have thought that a porn star going on 60 Minutes would create, rating spike? 60 Minutes hasn't had this good of ratings in over a decade. So, all these crazy things are going on. And now there's even evidence that the porn star may have been paid off to do that stuff. So, that she never even had sex with him, that she told a friend of hers that she never had sex with him. She just met him to talk about a business deal or something, and then someone else paid her money to claim that she had sex with Trump.
All possible.
Okay, Lewis. Well, we're way over spot here, almost an hour 30. So I want to thank you again for your time. If our listeners want to follow your thought-provoking work, how do they do so?
Smaulgld, Smaulgld.com, Smaulgld on YouTube, Smaulgld on BitChute, Smaulgld on Facebook, Smaulgld on Google+, and Smaulgld on Gab, and Smaulgld on Steemit.
You've got all your bases covered here in case we get removed from YouTube or further demonetized.
Yep.
Okay, great. Well, thank you again for your time, and I enjoyed this conversation, and hopefully our listeners will find this discussion interesting.
Thanks, Jason. Thanks, everyone.
Please like this video, share it with friends and family, and don't forget to subscribe to the Wall Street from Main Street YouTube channel if you have not already done so. We're closing in on the 20,000 YouTube channel subscriber milestone, despite YouTube censorship, and hopefully we'll be able to get to 30,000 or even 40,000 YouTube channel subscribers quickly, if YouTube doesn't shut down the channel. If YouTube does shut down this channel, remember to also sign up for the Wall Street from Main Street email list that's on the wallstreetfrommainstreet.com website, and will tell you where the videos are going to be uploaded instead of YouTube. Also, if you really like the content and you decide that you want to give a one-time donation, you can go to the wallstreetfrommainstreet.com website, where there's different options for you to do so. Or you can become a Patreon contributor. Thanks for listening, and I look forward to providing you guys with some of the best information, analysis, and financial education available out there for free or paid.